Like some of the other currency pairs, we are seeing a run back to the upside in the dollar versus the Swiss franc after a sharp fall after the CPI data. What has that run done from a technical perspective? I'll talk about in this video. Looking at the hourly chart, and you can see the run to the downside was started on the break of the 200-hour moving average. Of course, the CPI data came out, helping to push that price sharply to the downside. And the next target would have been this rising 100-bar moving average on the 4-hour chart. Didn't get there, just like this break to the downside, just like this break to the downside. And instead, the price started to rotate slowly and then with more momentum to the upside. When we move back above the 200-hour moving average at 0.91148, what happened? We saw the sellers turn to buyers and the price quickly moved back up toward the 100-hour moving average. That's a blue line in this chart. That level comes in at 0.9145, and that's where the buyer said, enough, I'll take some profit, and the seller said, we'll lean right here, and they pushed the price back to the downside. So where do we stand? Well, we stand in between the 100-hour moving average on the top side, 200-hour moving on the downside. Buyers and sellers are battling it out. We're back into this, we're trading market here for the dollar versus Swiss. What we can say is that the sellers had their shot. They missed. What we can also say is that if you look back over time, we have still have higher highs. Yes, we've seen breaks to the downside, but those breaks have largely failed on the last 3 breaks to the downside. So buyers still in control, but the battle goes on. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.